Broadcast is now starting. All attendees are in listen-only mode.
Welcome, traders, to this evening's presentation on how you can cash in on this post-COVID economic explosion that's been taking place over the last month or so. Hi, my name's Michael Guess. I'm the president and the chief developer of TradeSafe, and I'd like to thank you for taking time out to join me tonight. And I'm going to show you how you can not only take advantage of this economic explosion, I'm going to show you how to replace your subjective discretionary approach that's very inconsistent with something that is totally precise, totally mechanical, and absolutely consistent. Now, before we get started, I want to make sure that you know how to ask questions, because I encourage you to do that throughout this presentation. This is not just a one-way. If you will look in the top right corner of your main monitor, you will see the GoToWebinar control panel. It's a little vertical strip with a few buttons. Look for the topmost button. I believe it's got a left pointing arrow. It's yellow, I think. Click once on it. It'll slide over and reveal a hidden window. And inside that window, that's where I want you to type anything right now. Just let me know that you can see and hear what I'm doing, and then hit that send key. Thank you, Lou. Let me get a little more response from the rest of the gang here. Make sure the rest of you are able to do that, because this is how you're going to be able to ask questions. How about it, Isaac or Dave or Tim? Give me a little bit of a response. Thank you. Okay, and for those, okay, I'll wait for this last one to come in. Oh, gee, Isaac, I see you are twice. I hope you can hear me, Isaac. If you can, would you type yes? Since it looks like you're in 2 times. Isaac, would you do that? I want to make sure that you can really see what's going on. Okay, I don't want to wait around for that. I'm going to go ahead and keep moving. Again, we're going to show you exactly what it takes to reliably get your share of the pie out of this post-COVID economic explosion. Now, why am I qualified to say it? Well, let me introduce myself again. Hey, thank you, Isaac. I see you found it. Great, good. This is me. I'm Michael Guess, and I'm the chief developer of TradeSafe. And I want you to know what you are going to be able to expect out of this evening's presentation. First of all, we all know that the economy has really started coming back strong, mainly because a lot of people are starting to get vaccinated, and businesses are opening up. Things are coming back really strong. So you want to be able to take advantage of that, right? Because there's a lot of pent-up spending pressure. And of course, you want to catch those big trading opportunities, because it is a timing thing. So why am I qualified to make these kinds of promises to you? Well, first of all, I've been doing this for quite a while. More than 28 years I've been a professional trader, and I started TradeSafe over 2 decades ago, and I've graduated over 4,000 students, taught them how to use the TradeSafe system. Of course, I've created a host of other individual indicators and other trading systems, but I'm just going to share one of them with you this evening, and that's the TradeSafe mechanical trading system. But also, in a past life, before I even discovered trading, my whole specialty, if you will, was I was a psychotherapist. No, I didn't try to fix broken people. I specialized in helping people improve their performance, which was a brand new thing about 30 years ago, and nowadays it's pretty common. Well, I take that knowledge and bring it to the table with the people that use the TradeSafe system, because I will also be your personal mentor and coach. There's a lot more than just software involved here, as you'll find out. So yes, I am a psychological specialist. I can show you how to banish all of those self-sabotaging behaviors that have prevented you from being consistent. Okay, now that we got all of that out of the way, I want to reassure you that, I hope you don't have to leave, but if you do, this is being recorded, and we're going to send out some follow-up emails encouraging you to, of course, visit with me and ask more questions if you've got any. And you will have a link to the recording, and you'll be able to watch it at your convenience, okay? Plus, we're going to go ahead as a freebie. We're going to give you an ebook because you registered and even showed up. So you're going to get that as a bonus. Now, how do you reach me? Well, like I said, there will be a link, and that link will show you my schedule, my calendar. Best date and time that works for you, pick it. And I will set aside a full hour of my time just to answer your questions. And it won't be a sales call. I know that's all you're used to, but that's not what I do. I have never done that. I will only answer your questions. In fact, if all you want to do is say, Michael, help me solve the problems I've got with my own trading, I'm not interested in trade safe, I will even do that. I will help diagnose what is going wrong with your own trading and make some strong, candid suggestions on how you can improve your own trading. But this will fill up quickly, so it's first come, first serve. Now, before we get all the way into the meat of the presentation, I'm not going to read all this boilerplate. I am going to simply say, the FTC, that's who controls the internet, they say nobody's allowed to make any kind of promises or guarantees. And a lot of people break that rule. It's actually a law, not a rule. So I'm going to stick to it, but I will share with you our track record so that you will know realistically what you can actually expect, real world performance. And then finally, if you're a newbie and you haven't really done much trading, please remember that basic golden rule of trading: don't risk money you can't afford to lose. Okay, now that we got all of that out of the way, how can you cash in on this economic explosion? Well, this evening you're going to learn exactly what type of trading tool will give you the best results. I'm not telling you to stop what you're doing. If you got something that works, keep doing it. If it ain't broke, don't fix it. But you know what? It's always handy to have another tool in your trading toolbox, especially if it has proven performance. And a lot of you don't have a lot of money to spend on your trading. You'd like to make a lot of money, but you just can't afford a very big account. Will this system work in a small account? Absolutely. I'm going to show you how you can get started with a small account. Now, a lot of us, me included, when I started out, there was a lot of doubt as to, am I getting in at the right spot? I thought I was, and oh, well, maybe not. And I started win, lose, win, lose, win, lose. And I was not even sure what to get out, at a support or resistance level, a Fibonacci or market profile. I was overwhelmed with all kinds of stuff, and that led to a lot of doubt. What you really need is an ironclad consistency about the whole process from entry to exit. And I'm going to show you how to do that. And finally, I'm going to show you a very simple method for slashing your risk for each trade so that you don't have to put a lot on the line in order to start really making some serious bank. And I'm going to take you to the real charts, and I'm going to show you with the charts an actual trade. It's a 4-step, precise, easy method. It is totally mechanical. Very easy to duplicate. And once you're in the trade, automation takes over. You can just lean back and let it work. So I'm going to show you how to do that. If you add this all up, what are you going to get? What is this system capable of doing? Well, you will find out when I explain to you the importance of benchmarking later, because all of my graduates have achieved nearly 9 out of 10 winning trades on average. I haven't had a single student who graduated that had less than 87% winners over the last few years. So if all of this is appealing to you, stay tuned. Let's keep moving, okay? And keep in mind that you can ask questions. For those who came in later, look in the top right corner of your main monitor and you will see that GoToWebinar control panel. Click on the top button and you will see the area where you can type your questions. Now, what is this system about? Is this about options? No. Is this about position or swing trading? No, it's day trading. And you may say, oh, well, I don't have time for it. I don't like it. I've tried it. It didn't work for me. Please, please give me the benefit of the doubt, because I'm going to show you that part-time trading is actually possible. That's if you do have an authentic system that shows you the best way to manage your trading time. You can actually trade without being glued to the monitor all day. Part-time trading is possible because just like that camcorder on the right, it's got a zoom lens. You can go from a wide angle picture of the market, kind of like the charts there, all the way zoomed in close to whatever that low risk surgical entry smallest setting chart would be for taking your trade. In other words, I'm advocating don't use a single chart for taking your trades. That's what amateurs do, and that's why they're low on the food chain. You really need that perspective. You want to be able to know what the trend is doing for at least half the day, maybe all of the day. That's the wide angle setting of your chart. And as you use smaller and smaller settings, you're zooming in. You're getting more granular, more detail until it's time to take the trade and keep your risk really low. So zooming out and zooming in by adjusting the settings is not a new thing. It's been around a long time. We all know that this allows you to adapt, but it's not just any settings, certainly not the ones that are in your drop-down menu, because they're generic. They really aren't useful at all. I am going to give you a method, the same thing we use in our system, to determine exactly the settings for the charts for the market that you might want to trade. And it's all based on ratios. So yeah, let's avoid that one size fits all. Just like you see those three charts, that's one market, but three different, if you will, magnifications, perspectives. You got your wide angle downtrend going on the biggest chart on the left. You've zoomed in 300%, and that's your dominant cycle in the middle. And if you zoom in another 300%, that low risk surgical entry is the smallest setting chart on the right. So this enables you to tailor things in order to determine how strong is your trend. Yeah, that's not something you hear very often. Yes, we all want to know, is there a trend or not? And there's all kinds of indicators out there that claim to show you when there is a trend or not. But there's almost nothing that I'm aware of that will let you know how to gauge the strength of the trend, because that's what's going to inform you about how to manage and exit the trade once you're in it. You want to know this before you take the trade, because that will then help you know what the market is capable of giving you before the setup even occurs. So I'm going to give you that formula right now, and I'm going to pick a category of markets, not the stock market, because there's over 12,000 stocks. I'm not saying the system won't work on the stock market. Some people who talk to me after they've seen these presentations, they say, oh, all you do, your system is only made for futures or commodities. No, not at all. It'll work on Forex, futures, commodities, stock market, ETFs, the whole thing. It's just that some markets are actually easier to trade and better. And I don't have time for all of that distinction this evening. If you'd like to know those distinctions about why the stock market is actually the deck stacked against you, that's the institutions, if you will, you can visit with me in that scheduled call that I encourage you to take. But let's go ahead instead and focus on a category of markets called the indexes. We've all heard of the Dow, the NASDAQ, the Russell 2000, and the S&P, right? They're the indexes. They have trending characteristics. They're inherently trendy. So are currencies, for example. So we're going to focus on the indexes for a moment for this example, but you can use this same formula for any other market. Here's how it works. We're going to take the electronic version of the indexes, not the ones that are traded in the pit. Those dinosaurs are going away. And we're going to calculate the number of minutes during a daytime trading session. Now, I realize these electronic contracts, they're 24 hours a day, right? You can trade them anytime you want. but the vast majority of the volume is when the stock market's also open, which is what these indexes are primarily based on. So you want from the open in the morning till the afternoon close, not when the stock market closes, but 15 minutes later. So the time is 405 minutes from the 8:30 Central Time open, that's where the exchange is located in Chicago for these indexes, till the 3:15 close. Obviously, if you're on the East Coast, just add an hour. So 405 minutes, why are we doing it this way? Why don't we want to use the drop-down menu that simply lets us put up a daily chart? Because we want to calculate what the smaller setting charts are going to be. So if you start with 405, you then want to look for the next smallest number that'll divide into 405, except itself, that will divide evenly into it without a remainder. What is that? 135. And you keep doing that smaller and smaller and smaller. I'll save you the time. The next three sets of numbers or settings for your charts are 135, 81, and 27. The 27 is awfully close to a 30-minute chart setting, right? Like you have in your drop-down menu. But that 30-minute chart setting is generic. It tries to satisfy everybody. It's not precise. The 27 is exactly correct for the indexes. But any of these three settings are still way too big for day trading. We need much smaller settings. So what we're going to do is keep this going, and we're going to maintain a 3-to-1 ratio. We're going to take what is 1/3 of 27, that also divides into 405, and keep it going until we end up with our smallest one. Here they are. Your wide angle setting is your 9-minute chart. Your dominant cycle is your 3-minute chart. Your 9-minute chart is going to show you what the trend is typically for at least a half a day or so, often for the whole day. Your 3-minute chart is good for about an hour or two's worth of typical trending. But when you're really ready for a trade, you want to use the smallest setting chart, the 1-minute chart. So that's the equivalent of the zoom lens, wide angle, mid range, and close up. So you're using a 3-to-1 ratio, and you might say, okay, well, what about all this volatility that's been happening since, the COVID thing is over and the market's been exploding? Risk levels have really been going through the roof, haven't they, Michael? Yes, that's true. A lot of times I have seen, even on a 1-minute chart, the risk levels are beyond what our system allows because we keep our risk levels very small. I'll tell you what they are a little later. So what do? Just pass on the trade? No, we have a second category of charts called tick charts. Now, you may not know what tick charts are, and you don't even need to know, but instead of time and price, think about it more as like volume and price, or the number of trades that have occurred, and that is what builds the bar. So that gives you many more additional entry opportunities. How many opportunities can you expect for a single market in one day? Oftentimes, it's an average around 6, 8, maybe 10 or so setups. That's if you're watching all day long. I've seen as many as 20 and 24 on a single market. If you're monitoring a couple of 3 markets, well, you're going to have more trades than you can possibly keep up with. So it's not for lack of opportunities. Now, I've shown you how this is done. You can use this same calculation for any other type of market. Give me a little bit of feedback, if you would, please. Type a yes and let me know if you do understand how I got to where I am and whether you think you can do that. Type a yes if you do that. If you're not sure, type a question, but give me some feedback because I need your feedback before I can take the next step. Okay, Tim says he does understand it. Okay, great. Now, it's all well and good to detect and determine a trend, and I will show you how we do that in just a few more minutes. But a lot of people say, Michael, I'm always looking for the trend, but it seems like I get caught in congestion or chop quite often, and I take trades when I really should not have done it. Is there some way that you can keep me out of trouble? Will your trade safe system keep me out of congestion so I can avoid taking trades during that time? Yes, absolutely. If you look at this screenshot of a chart, real stripped down and simplified, look at the bottom of the chart and you will see those bands of color. Where it's green, it had been in an uptrend. Where it's that salmon pink color, it had been briefly in a downtrend. Now, what about when there's no color at all? That's when there was no trend. And that's when it was either in congestion or had lost the trend through some other mechanism. Now, you may say, okay, that's great. What in the heck is that rectangle up there that you've got superimposed on top of the price action? Well, it is a visual aid to let you know what the algorithm in the system is using to do its calculations. It's looking back so many bars and doing its calculations, and then after its conditions are satisfied, then you'll notice down below the color stopped and it is officially in congestion. So if you'll follow my cursor, we had been in an uptrend right up until here, but right there, this bar started out of that zone of congestion, if you will. That's kind of range bound, but it wasn't confirmed until right here. And that's when the color returned, except it was a downtrend. And then it went right back inside of that zone of congestion. And once it did that, the color disappeared. So you've got a visual mechanism in place for notifying you at all times that whatever chart you're looking at is either in a trend or it's not in a trend. But you're going to say, well, what if I'm not paying attention? I want to know because you told me I can do part-time trading. I don't want to sit and watch paint dry while the thing's in congestion. Well, we have audible alerts besides the visual that will notify you. Your computer will actually talk to you in plain English. It won't make some kind of dumb sound. It'll talk to you in plain English and say something like NASDAQ 3-minute change of trend, or NASDAQ new congestion, or NASDAQ 3-minute breakout confirmed. Things like that. There's a whole host of various conditions that you will be alerted. And this means that if you have been watching a market carefully and it lost its trend, you should get out of your chair, take a break, maybe go stretch, exercise, rehydrate, or go in the kitchen and fix a sandwich or something. Because if you got your speakers cranked up and you hear an audible alert that lets you know the trend is back, come on back and sit down. Then you can refocus. This enables you to avoid brain fog, because that's what happens to too many people who sit there and try to day trade nonstop. Don't do that. That's really bad for you. Bad for your health, and it's bad for your pocketbook. So you'll always be told whenever there's a breakout, a fake out, or any other condition related to congestion or trending. Now, this will happen on all of your charts, even if you've got your charts hidden, because with the platform that we use the NinjaTrader platform because it is a professional grade day trading platform. It's fully automated and programmed so that if I'm monitoring, let's say, the indexes as a group, and I can't look at every one of them at the same time, I'm hiding some of them. You may say, well, why don't I want to look at all of them at the same time? Okay, I'm going to put on my psychotherapist hat for a moment. When I was trained in school in neurophysiology, we learned that the brain just can't process that much information. So all of you guys that think it's a macho thing to have 6 or 8 monitors, guess what? You're shooting yourself in the foot. At most, you need only 3 monitors. This system will work on a laptop. You don't even need more than 1 monitor for that matter. So what I'm getting at is focus on whatever market is trending and hide the other markets that are not trending. That way You will avoid multitasking because multitasking has been thoroughly been disproven many, many times over. Okay, I'll get off my rant and just remind you that you will always get a very clear signal when it is safe to start looking for a trade. Now, beginners, they focus way too much on the entries. Professionals, they know the real money is made on the exits. And in that screenshot, if you look at the entry and the exit arrows there, you can see that in between, there is this trailing stop. What does that mean? Well, I'll demonstrate it in real time when we do go to the charts. But if we began a trade just after this pullback occurred, this was an uptrend and we enter off of pullbacks, which is as old as dirt. However, our method is totally precise and mechanical, as you'll soon see. We entered just one tick above that setup bar. We took off half our position, that's called scaling out, at a quick and easy to reach target. Again, you'll see me do it. And that paid for the trade. Afterwards, we trailed our profit stop. Did we have to lift a finger to do anything? Well, once we connected our stop to that indicator, it's automated. And it adjusted itself, as you will see, all the way until the market took you out of the trade. So you do not need to guess where to get out. That's the important thing. You don't have to guess about, is this the best spot? Because then you're going to torture yourself and your subconscious is going to try to talk you into things. How many times has that happened, huh? Your exit strategies, that's right, plural. We don't just use a one-size-fits-all exit strategy. We don't just scalp, scalp, scalp. For example, we have 3 separate exit strategies. Each one is predefined and automated, and it's all based on the strength of the trend. Remember we mentioned that a few minutes earlier? How strong is the trend? Well, I'm getting closer to showing you how to determine the strength of the trend so that you'll be able to choose the right exit strategy. I will boil it down for you right now and tell you that it really comes down to just 2 basic approaches. And I'll use a baseball metaphor since it is baseball season. If there isn't much going on, it's a weak pitch and you can't really hit it hard, you're going to bunt maybe and get on base. That's a single. That would be a scalp. But if the wind's at your back, so to speak, and it's right down the middle and you hit the sweet spot, bang, you want to swing for the fences. That's scaling out. So basically, you're either going to scalp or scale out. And I will show you exactly how you'll know which one to choose so that you don't leave money on the table. You make the most of what the market can give you. And by the way, as I already mentioned, if you do choose to use the scaling out exit strategy, that trailing stop will adjust itself in real time. You don't have to do anything once it's engaged. This all adds up to the very highest probability of getting winning trades. This is why, as I said, every one of my graduates had at least 87% winners over the last several years. What does that add up to? Consistency. And that's all we really want. So if we move into this theoretical 9-minute wide angle uptrend, it's been going on for a while, and you've got a 3-minute dominant cycle meandering slowly downtrending, and the 1-minute low risk surgical entry trend had just begun an explosive rally. They're not aligned. They're not in sync. This is what you optimally do want. You're just not going to get that all day long. It's going to occur occasionally. So what do you do about the other kinds of situations? Now it's time to show you how to determine strength of trend, which then informs you as to should I scalp or scale out? And this is exactly what my own students do using the Trade Safe system. And to help them remember it, I teach them a little rhyme. It's a mnemonic, as those things are called. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. So if all 3 of your charts, your time frames are trending in the same direction, up or down, that's the 9, the 3, and the 1, and that would include any tick charts if you're going to look for a trade on a tick chart. If they're all going in the same direction, you got potential for a really strong move. You're probably going to get a lot of follow through, and you don't want to throw that away on a scalp. You want an exit strategy that keeps you in that trade as long as possible. That's scaling out, right? Now, I already told you, getting all three of them to agree isn't going to happen all the time every day. It will typically happen at least once, maybe twice a day, but sometimes maybe not. Sometimes it'll be all day long. Tuesday and Wednesday of this week, when we had huge sell-offs in the indexes, oh my goodness, we had everything trending down strongly, and we had setup after setup after setup. And we banked on a 4-contract basis well over $3,000 or $4,000 a day. So yes, that is possible. But what if you've only got just 2 out of those 3 charts or time frames trending together? That's the one you'd enter the trade on, and the next higher setting chart. That's your 1-minute or tick chart and the 3-minute. If only those 2 are trending up or down together, but not the 9, well, you still have the potential for some kind of price move that's going to go maybe a little bit of follow through, but not as far as if all 3 of them were all trending together. So you don't want to stick your neck out. You want to just load the boat and go for a few ticks. Now, how many ticks is that? Well, that's programmed into our system, and it's part of what is called a scalping exit strategy. So give me some more feedback, folks. Do you understand what I've shown you so far? Do you think you can duplicate that? Do you think that will help you choose how to scalp or scale? Give me a yes. Let me know if it makes good sense to you. Want to know if you understand it at least. Okay, thank you, Lou. I appreciate that feedback. So folks, if you do these things, what can you reasonably expect? I said the FTC won't let me make promises, but I am going to show you what I believe is a reasonable expectation, and I think you will agree with it once you see it. So, yes, we all want to have that ruler straight equity curve that goes to the moon, but let's start again with the indexes. We're going to stick to what we had in our previous example. We're not going to jump around. And the indexes are, again, part of that universe of markets called futures and commodities. And again, for those of you who don't know anything about it, or maybe you've heard all kinds of BS that, you can get really hurt or this or that, I want you to know that they're actually easier and safer and cheaper, and you get more bang for the buck than you do in any stock. Any stock. And at tax time, you get treated royally much better. So with that being said, let's just say you don't have much money. You can't afford the $25,000 it takes to open up a stock day trading account and begin trading. So what if you only had a few $1,000s? Well, if you wanted to trade the indexes, you would only want to trade maybe 2 or at most 4 contracts if you had a very, very small account. Okay? And what is a small account? Well, the margin requirement for trading a single contract at a time is about $500 depending on whatever broker you use. Okay? Now, if you're using somebody who is an all-purpose like TD Ameritrade or somebody else like that, they're going to rape you. Sorry. You need to go to a specialty broker who really knows day trading and will give you the best break. Now, I already mentioned that the NinjaTrader platform is a professional grade day trading platform that we wrote our system for. They also have another department. They're not just a software developer. They are also a broker. So you can open an account with them. You can even sim trade for a while and not risk any money and get the hang of it. But their requirements are only $500 for any individual contract. So if you were to trade 4 contracts, you would need at least $2,000 in your account. But if that first trade was a loser, well, you can't trade 4 anymore because you've dropped under that minimum requirement. So what do I recommend? Well, I recommend being overly capitalized so that you don't trade with your back to the wall emotionally. I recommend about a $5,000 account. 3,000 maybe, and you'd only be able to trade 2 contracts then. But I would recommend about a 5,000. More would be better. And with that, I can assure you that you will be able to generate at least 2 to 4% return on your investment. What is your investment? Your $5,000 account. How did we arrive at that number? Simple. With the TradeSafe system, every time it generates a signal, if you took that trade and you did that day in and day out, Monday through Friday for a full month, and you subtracted the losers from the winners and took that net profit and divided it by the number of trading days, which is typically 20 to 22 trading days, it's going to run around $100 to $200 a day, actually probably more. Now, how did we get 2 to 4%? Well, if you divide $100 or $200 into 5,000, that works out to 2 to 4%. So some of you might be saying, okay, I would really like to make a lot more than $100 or $200 a day. I'm accustomed to lots more. Is your system only good enough for that? Nah. If you have a bigger account, you just trade bigger size. I'm trying to also explain to those folks out there, the vast majority, who just don't have a very large account. Or maybe they don't want to devote a lot of money to get started. Maybe they've been happy using TD Ameritrade or somebody else, or their options trading, and the bulk of their trading money is elsewheres. And they want to just take a little bit out and try this day trading thing. Well, 5,000 bucks will get you started. Okay? Now, if you are a small trader and you really would like to be making more than 100 or 200 a day, you want to replace your income, you want to maybe quit a job, you want to be able to have part-time income, or if you're retired, supplemental income, the ideal way to do it is to simply start with a $5,000 account, pardon me, and then you want to build it up to a $7,500 account. In other words, don't take any money out. Keep the profits for a little while, and let it build up to $7,500. That's a net increase of $2,500. Once you've built it up on that $2,500, you're going to trade a little bit bigger size. You're going to add a pair of contracts. So you're going to go from, say, 4 contracts to 6. And if you hold everything constant because you're trading bigger size, it will take you less time to make the next $2,500 because you're trading bigger size. And you'll go from 7,500 to 10,000 before you know it. And you'll go from 6 to 8 contracts. Wash, rinse, and repeat. Now, you can't take that to infinity. There is no such thing as infinite liquidity in any market. Plus, psychologically speaking, I don't think there is any trader in this room who would be able to handle the emotional impact of trading huge size. 20 some years ago, I was trading 50 contracts at a whack of the S&P E-mini. But you know what? When I had a couple of losers in a row, which was pretty occasional, but when I had it, it was hard to take that next trade. So I throttled back. You know what my sweet spot is? Even though I can afford many times that size, I tend to trade 10 contracts. But that's me personally. I can help you as a trader, when you become one of my students, find what your sweet spot is, help you with your trading psychology. Now, a lot of you might say, okay, if you were to just keep adding and adding and adding, wouldn't you end up with some kind of obscenely large return on your investment? Yeah, theoretically you could, but we all know that's not real. I want to keep you well grounded, and in order to do that, Let's remember, I said at the beginning of the presentation, we're not going to do all day long day trading. I don't believe in it personally. I think you can still make adequate income from being a part-time trader. So let's start with, how often do you want to trade? Instead of 20 to 22 days, let's say we cut you back to 15. And instead of all day long, making say 200 bucks a day, averaging after the losers are deducted, you're still averaging 200 bucks a day. If you cut it to a half a day, well, then you're at $100 a day. So for 15 days out of the month, you're going to make $1,500. A $1,500 return on a $5,000 account is over a 30% return. So just ask yourself, have you ever made over 30% in a month? We've done it in a week. In fact, we've done it in a single day. Admittedly, that was a true exception, but it is possible. So, what's your return? Well, it isn't going to look like that because you are not a clone of all the other traders. You see, too many people think they can buy that stairway to heaven, like the Led Zeppelin song. They think, oh, I'm going to buy this thing and it's an ATM machine. All the markets are the same. It'll just spit out money, and boy, you feel burned after you've used it for a while. That's why with the trade safe system, we include benchmarking. We take into account your personality and the fact that markets also have personalities. They differ. Some trend better than others. Some don't trend at all, like crude oil and gold. They tend to congest. Everybody thinks they're a sexy market, but they don't trend worth a flip. However, if you trade a trending market and you want to find out how well this system works on it and how suited your personality is, because maybe you're aggressive. Oh no, maybe you're conservative. Oh, I don't know. Maybe you're somewhere in between. You will be able to determine exactly how the system needs to be adjusted and tweaked, dialed in to you. That's what benchmarking does. It's a statistically viable sample of at least 30 trades. This is after the end of my course. And you've absorbed everything you possibly can. You've been coached by me. You've learned all the material. And now it's time for you to strike out on your own without any further guidance from me. And you want to be able to build your own authentic track record. You will be able to choose what you think are the best of the best setups. Now, you're going to see the same signals that I see and any of my other students see, but the big difference is I might not want the trade that you do, or you may want a trade that Joe Blow doesn't want, because we all have different personalities. We all have a subconscious. That's the psychotherapist in me again, right? So benchmarking, which is what professionals do, is something nobody else in this financial industry does for the small retail trader. You get it as part of the package with the Trade Safe system. You will find out that you too can achieve and exceed at least 87% winners. If you'd like to achieve that, type a yes. In the meantime, I'm going to go ahead and freeze my screen and switch over to my charts. Now, if you're watching the replay, of course, you can see what's going on. And now I'm going to bring back my screen, and you should be able to see my charts. Would you give me some feedback? Let me know if you can see the charts. Oh, Lou is quick. He already knows what's coming. How about the rest of you? Can you see my charts? I want to be sure the rest of you can. I don't want just one person typing yes. How about Tim or Trader or Giles or anybody else? Okay, thank you. All right, now I'm not going to go into all the little details of what's in each of these charts. Now, again, even though I might have 3 monitors, I've assembled all my charts on a single monitor to prove to you that you can trade with a single monitor. And I will remind you of the rhyme, the 1 and the 3 need to agree, best as if all three agree, and here at dead center is the 1-minute chart. It is in a downtrend. You can see the color, not just lower lows and lower highs. Please don't ever say that because that is too subjective. And I could get a half dozen traders with a half dozen different answers about when that trend supposedly began. Use an authentic trend indicator. This one shows it. Now, here's the 3-minute chart right there. It is also in a downtrend. It's got that same color. In fact, it broke out of congestion and started a brand new trend. That's how it did it, okay? But the 9-minute chart down here is apparently still in congestion. It was in an uptrend, but after that bar right there, it went right back into congestion. So do I have all three in agreement? Nah, I don't. Does that mean I'm going to scalp? Actually, I'm going to introduce you to another little nuance of the trade safe system. Remember I said we had 3 exit strategies? Well, scalping and scaling are the 2 major categories. In scaling, we have 2 different targets that you could take half of your position off at, either $50 of open profit if you're trading 4 contracts, or $100 of open profit if you're trading 4 contracts. So we call it a scale 50 or a scale 100. The scale 100 is when all 3 agree. If only the 1 and the 3 agree and the risk is a little bit too high for scalping, then you could use a scale 50. Now it's time to talk about risk, and I'll show you how we calculate it a little bit later. What is the risk for each exit strategy? What's the most you can lose on a trade safe trade? Well, let's level the playing field. I don't know how many contracts you might trade or whether you're trading in the stock market or something else, but if you were trading these indexes, to stick to this example, on a per contract basis, if you were going to scalp, the absolute most that you would lose is only $70. That's right. And it's not a fixed amount. It's a variable stop. It depends on the size of the setup bar, its range. If you got a smaller bar, you may get a risk that's smaller than $70. But if it's too big and goes beyond what 70 is, you can't take the trade. You can't scalp. You would then have to consider scaling out because the maximum for scaling out per contract is $100. Still not a lot of money, folks. So as you can see, your reward risk ratio is already starting to stack up in your favor because we keep our risk under tight control. We don't use fixed dollar stops. They're variable. They depend on the range of the setup bar. And now that we finished talking about that, what else is on this screen? Well, over here are the 2 tick charts, and in other presentations I've shown trades on those, but tonight we're going to stick to a trade on the 1-minute chart because it's real easy to follow. And what are these 2 windows here? This is the log that keeps track of all the changes in trend. Like here it says a breakout was confirmed on the 144 tick chart, or the 3-minute went into or congestion had been canceled, and so forth and so on. But wherever I put my cursor, this is the readout. The data box gives me the open, high, low, close, plus down at the bottom of that data box, my proprietary indicators to help you determine if you have a legal trade safe setup. Now that we know we have trend agreement with at least the 1 and the 3, I have already pre-selected a scale 50 exit strategy. That's right. You don't wait till you're in the trade to choose your exit strategy. You pre-select it. This is why you can relax, plan ahead. This is not like a video game where you shoot anything that moves. You do not need fast reflexes with the trade safe system. It's more like a chess game. It's about strategy and planning. So we're going to maximize this window. We don't even need to look at all that other stuff anymore because this is the chart we're going to take our trade on. And I'm going to slide it up a little bit so you can focus a little better on it. And I'm going to even move this up a little higher so you can see it, okay? Now, what I'm going to do is turn this on. You can see it, it's updating in real time. And this is normal speed, but so we don't stay here all night, I'm going to speed it up to about 8 times normal speed. And when we start to see a pullback, I'm going to show you what you can expect from the pullback and why we're looking for a pullback. Okay, I see somebody typed something, so I'm going to pause for a moment and read it. Iron Man wants to know about getting your mind right before we do this sort of thing. And if you mean trading in general, or day trading, or my system, I'm not sure which, but yes, I'm going to say to any of those. And I can definitely do it. Remember my background in psychotherapy. I absolutely, and I will also mention at the end of the presentation that we have a very powerful tool, a psychological tool that will help you neutralize any self-sabotaging behavior, that whether you overtrade or you have analysis paralysis or anything else. So did that help put your mind at ease a little bit, Iron Man? Give me a yes. Ah, thank you. Okay, well, I'm going to turn this back on and I'll tell you what, I'm going to show you what you can expect and why. Well, actually, I just hit the function key and it works better. We've been in a downtrend down to this lowest point, right? When you have a retracement or a pullback, it's going to go to this moving average. And as price moves in that direction, I want you to think about it as if it were a stretched rubber band. It's building up a lot of energy because you're not changing the trend. Notice the trend is still, even with these two bars, these two candles moving higher. And by the way, I use candles only because they're easy to see. I don't use candlestick theory at all. I find it too subjective. But you're looking for a pullback, a retracement to this moving average. Now, that sort of thing has been around, it's as old as dirt. But what I do is I give you the precision that's lacking in other people's approaches. If you've ever tried it, you know what I'm talking about. This will let you know when you are within striking distance of what I call the sweet spot or that zone of influence. It doesn't have to actually make contact with the moving average. If it came almost reaching it and stopped, but it was inside that zone, I've found from back testing that's plenty good enough. Or if it overshot and the bar is on the other side of the moving average, but the lowest point of the bar is also within so many ticks of that sweet spot, you will know because right here, this indicator that says Rule 21, when we get close enough, you will see it as I put my cursor, you will see it change tick by tick every time a new bar forms. And you will know, instead of some idiot light, you will know, okay, I am getting close to that sweet spot. I'm getting ready because this is the second step. We've already fulfilled the first step. It was drop dead simple. You had to find out if the 1 minute and 3 minute at least agreed. They did. So step one, done. Step two, pull back to this moving average. Let's see if it does that. I'm going to turn this back on. And we will see how many bars it takes. Now, I don't want it to just do it in 1 or 2 bars, just spike up. There's a certain minimum number of bars that we do require.
9-minute breakout reset.
Okay, you probably heard in the background one of my alerts going off saying that the 9-minute chart's reset, but that has nothing to do with this trade. All right, now I'm going to pause here for a moment and take a look. 1, 2, 3. Okay, we got a little further to go. You may say, isn't that a setup bar? Well, actually, it was a setup bar at that time. And you would have put an order in one tick underneath its low. And if any bar after that would have traded below it, it would have put you in the trade. But so far, this brand new bar looks like it's going to go even higher. If it does go higher, the bar that is the furthest or the deepest in the pullback, that's your candidate for being the setup for the trade safe trade. That's your second step. So I'm going to go ahead and remind you that once we've had our pullback finished, what are we looking for? Let me bring this back. We'll put an order in and we want to catch it as it snaps back down and get the follow through. That's what you're looking for. So with that being said, let me go ahead and erase these and just let the steps unfold. This bar right here, if I turn it back on, it's on 8 times normal speed. I'm going to slow it down to normal now, to normal speed. Notice over here you got a counter. It's counting the seconds down. When it gets down to around 4 or 5 seconds, we're going to pause. And I'm going to show you whether or not this is a legal trade. All right, let's pause. This bar is the furthest in the pullback. Before it, that one was, and it was the previous candidate, but nothing traded underneath it. So if I had have placed an order, nothing would have triggered it. I would have had to cancel the order and start it over because this bar is now the furthest in the pullback. With 4 seconds left, I want to know, is it touching that moving average or is it within a certain number of ticks? You can obviously see it's touching, but here is the accurate readout right here. When I put my cursor under it, the readout says 0. If it were, say, this bar right here, it's showing that the part of the bar closest is 3 ticks away. So you're starting to get the hang of this, I hope. It lets you know as you get closer and closer that you need to finally get ready. That way, you don't have to have those lightning fast reflexes that so many people think you need. Now, I don't want to put all my eggs in one basket. In other words, a pullback to a moving average. I would like some independent confirmation that's calculated in a totally different way. It's uncorrelated. Well, that's what this indicator is, not the colored trend indicator, but the red line that is superimposed on top of that same indicator. This is an oscillator. It's one of many various oscillators. I'm not going to tell you which one it is. I've completely reprogrammed it. It's not stock. And all I needed it to do was get overbought. Boom. Is it overbought? Yeah. Drop dead simple. So we've satisfied steps 1, 2, and 3. Very simple. Now, all I'm going to ask you now is, what's the 4th step? Risk. I told you the maximum risk for scaling out is $100 per contract. Excuse me. Now, we have an indicator right there, risk. If I put my cursor on this bar with 4 seconds to go, sure, it could grow bigger in the final 4 seconds, but it's highly unlikely that it's going to get above $100 in 3 or 4 seconds. It's showing that its risk on a per contract basis is $45. You may say, well, why doesn't it show for the whole trade? Well, it's because I don't know how many contracts you might be trading. It's showing it on a per contract basis. Okay? So we are only about 4 seconds left before this bar finishes. Do we want to wait for it to finish and then put the order in? I would recommend against that because notice this bar is currently trading at its low. If it closes on its low, the next bar may even gap below it and you would have missed your entry. I recommend keeping your cursor one tick under the low of that bar, and that bar's low is at 31,580. We'll drop down now to 79. And with the NinjaTrader platform, instead of using a DOM, depth of market window with ascending, descending columns of numbers, very counterintuitive, not easy to follow, it's so much more intuitive to just click directly on the chart where you want to park your order. And so how do we do it? You right click, and I know you got a bunch of menu choices here, but fortunately, all the orders are grouped together, and we always choose the last one. So it's going to be the same choice every time, every time, every time. So we're going to put a stop limit order, which means we'll get no slippage once we're in the trade. And it's for 4 contracts, and it is a sell at that price. So listen to my computer as I park the order.
Order submitted.
If you heard my computer, type yes. Otherwise, I'm going to now slide this over so you can see the relationship of my order to the setup bar. This whole process was totally precise, no guesswork. You knew when you had a trend, color. You monitored the retracement, and it was a direct pullback, typically 45 to 90 degrees is what we look for, no meandering. And it had to have a minimum number of bars, and it had to come within so many ticks of touching. Well, it did that. And then finally, step 3 and 4, it's overbought. No, we don't get into the trade when it gets out of overbought because that's a lagging indicator. We would let price action put us in the trade. It has to prove itself by trading through that stop limit order. And of course, we know what the risk is. So let's find out. Let's just turn this back on and see how the trade works out. I'm going to speed it up a little bit.
Order filled.
Order fill. Let's pause and see the automation that just started. This line, which was one tick under the setup bar, has changed color. Here's the entry bar right here that now traded down through it. And these other 2 lines, the green one, that's our target for scaling out of half of our 4 contracts. We're going to buy back 2 of them here on a limit order. Again, no that controls any slippage or anything like that. You absolutely get that fill. Or up here, that's your stop loss order. Now that's way the heck up there. That's at the maximum amount that you could afford to lose, which is $100. But the risk, according to this data box, it says 45. Here's how you get it. Drag and drop it down to 1 tick above the top of the bar and click. Easy as pie. Now you have a $45 risk. How is that determined? The distance from where you would enter the trade to where you would be stopped out in ticks, calculated in dollars. That's your risk on a per contract basis. There is your risk. Now, we've made our target really easy to hit. As you can see, it's just a few ticks away. So let's turn this back on and let automation. Oh, by the way, before I say any more, there is more automation built in. I almost overlooked it. These 2 orders are tied together in what is called an OCO. One cancels other. It's a bracket order. So that if I got stopped out, oh shoot, and forgot to cancel my target order, and then turned off my computer, ooh, you know, that happened to me years ago when I was a beginner, and that working order got hit, and I was underwater the next morning when I turned on my computer. So this takes care of it. It'll straight cancel that. These are tied together and one cancels the other. If one's hit, the other one is straight canceled. But if we hit the target, watch what happens. You're going to see the stop get moved down to break even, plus 1 more tick of profit, which will even pay for the commission. That way, even if it doesn't trade through the target and make us 50 bucks, you will still, if it comes back up and scratches, you'll still make $20 on the whole trade, because one tick at $5 and 4 contracts, 5 times 4, that's $20. That's more than enough for your commission and or slippage. So let's see what does happen. Watch the red line as price comes down and hits the target. It will cancel and replace the red line.
Target filled.
Target filled, said the computer, and the red line is now moved down to here. The green line's disappeared because we've already scaled out and because we don't need protection for 4 contracts anymore. More automation automatically took place. That's the beauty of automation in programming. Your stop loss is now for the remaining 2 contracts. It says 2 here on the label. But it's really not a protective stop loss, is it? It's a profit stop because we're now on the profit side of where you entered and you've already made 50 bucks. So if we don't go any further and come back and scratch, we'll pick up an extra 10 bucks. You would have made $60, a modest win, but still you get a lot of those. They add up. But let's see what happens if it keeps going, because we want to show you how to trail a profit stop automatically. Now, price has to hit our trailing stop indicator. Now, I'm going to slow it down to normal here while I do something. You see this indicator right here? You may think you know what it is, but I've completely reprogrammed it so it doesn't do what you think it does. I am going to attach this indicator to our stop order. Here's how you do it. You just go through a series of menus and select it. And we're going to give it a 2-tick offset. And it'll be for the last price. Now watch what happens if I speed things up a lot. I'm going to speed it up to about 15 times normal. Because what I want you to watch is every time a 1-minute bar finishes, every 60 seconds, one of these dots will appear above that completed.
Congestion canceled.
Okay, my computer's talking to me about another chart. Ooh, look how close. Are we going to get tagged here? No, we didn't. I'll bet subjectively you might have jumped out. But with an automated system, watch what happens. It's now trailing a stop. It's keeping it 2 ticks back from where the actual trailing stop is every time. Now I'm going to restore the auto scaling so you can keep up with it. And it's going to automatically adjust itself so that if it's really
9-minute. 9-minute. Breakout confirmed.
okay, your computer will keep talking to you about other charts that are going on, but what I wanted to point out to you is it will adjust itself like a surface-to-air missile. Its trajectory, its rate of closure. See how it's so close right now because price is going sideways. So what we're doing right now is just reassociating it like we were before. We're not out of the trade, believe it or not. Whoops, 2 ticks. It's adjusting itself. Now, the reason why that popped up and I had to do that was because it hit the indicator. The stop, though, which is separate from the indicator, remember we gave it a 2-tick offset, it's 2 ticks behind it. That enabled us to squeeze more out of the trade than even what the trailing stop is capable of. And I show my students how to determine when to do that and when not to do that. So we are seeing it adjusting. Oh, and now the trade is over.
Trend loss.
Now let's just keep going and see what happens.
1 minute. New congestion.
And you just heard the computer say it. 1 minute, new congestion. And there is the congestion box. And if I let it keep going forward, and let the next bars keep finishing. Notice there is no color, right? So we've lost the trend. So this from our setup bar up here and our entry right there, if I do this, Control E, is that going to do it? I'm not sure if that's going to show the actual, there it is. Here are the little arrows that shows our entry, etc., right there. Okay, so from here all the way down to right there, that's the money we made. Now we made 50 bucks back here. The rest of the money from the remaining two contracts was trailed all the way down to there. So that's the whole purpose of scaling out. You want to hit an easy to reach target quickly so that it pays for the trade in case it doesn't go very far after all. But if it does, you're still in the trade with at least some of your position, which this one did. Here's how much the trade did make. If we open up the chart trader on the right, it says over here, I don't know if you can see it, if it's covered up by the GoToWebinar control panel, you can drag it out of the way, or you'll just take my word for it. It says $820. So Iron Man and Isaac and James and Lou and Tim and Dave and everybody else, simple question. Would you like to have that kind of automation, precision, and adaptability to give you the consistency that this system is offering you? No, you're not going to get an $800 and some winner every time. You'll get those small $100 winners or $60 winners maybe more often, but 87% of the time you're going to be winning. Give me a big yes if you would like to have that kind of consistency in your trading. Yes, it does wonderful with the volatility of the NQ. You do not need to trade the individual stocks. They have huge requirements as far as margin, etc., etc. The margin requirement for the index itself with lots of leverage, 20 to 1, is only $500 per contract, Iron Man. We trade the NASDAQ, the Russell, and the Dow. Why don't we trade the S&P ES or E-mini itself? Because 20 years ago, it got so liquid, it was so popular that the institutions moved in to hedge their bets on their other types of trading for hedge funds and mutual funds and things like that, and they wrecked it. The ES does not trend smoothly as much as it used to. I'm not saying you can't trade it. I'm just saying you get better results with these other three indexes. I hope that answered your question, Iron Man. Give me a yes if that did. And I'm going to go ahead and fold this back in, hide it, close this, and I'm going to take you back to where we were. Now that you've seen an example of how it actually works in real time, and that was just one trade using one exit strategy. We don't have time for lots and lots of trades, obviously, because there's a lot of material to cover. So let me wrap things up here. The trend following approach, rather than counter trend, which is stepping in front of a moving train, breakouts, which lead to fake outs, or range trading, which is very difficult. You have to be extremely nimble, and it's hard to determine when you have a trading range. Trend following is simpler, easier, safer, and more profitable, in my opinion, than any other method. The TradeSafe system is a trend following system. It uses cycles-based multiple time frames or charts that are tuned based on the market you are trading. I've shown you how to do that, so you'll know what settings to use for each chart. And then based on the strength of the trend, how many of those charts are trending together, you will know how to adapt to what the market can give you. That's the strength of the trend. And then when it's time to take a trade, you'll know you will never, ever lose more than $100 per contract. That's the max. So you saw the automation. That's the beauty of it, because you can't mouse fast enough to keep up sometimes, especially with the NASDAQ and its volatility. With our automation, it makes child's play out of the NASDAQ. So Iron Man, yes, sir. You can trade the NASDAQ. We love it. This is all adding up to, if you look at that flow chart, a true Boolean logic, rules-based mechanical trading system. I know there's a lot of vendors out there that call what they do a trading system. That's just marketing hype. There are perhaps only a half dozen actual true mechanical trading systems in the whole planet right now for day trading available to you. And the TradeSafe system is one of them. And it has absolutely precise entry signals. It lets you know the first step, trend agreement, the second step, a pullback, the retracement, and when it's fulfilled exactly and precisely. And you get independent confirmation out of that overbought and oversold condition. And you know your risk will never be over 100 for scaling out, or even less, 70 or less for scalping. When all those conditions are met and you take the trade, you know that you're going to be a consistent winner. And we provide you with a real roadmap to help you learn all of this. We don't just try to give you software and a little bit of coaching. We give you the full 9 yards. I'm not going to ask you to read all of this, but we give you 90 days to go through an entire course. Most students finish it in far less because it is, after all, self-directed. It's self-paced. You can do it in a lot less. And you will be in a coaching room. I call it a coaching room instead of a trading room, with me in your corner, watching you take trades. That's right. Nobody else does that. I can actually watch you execute trades on your charts and coach you through any problems that you're having. And you can ask me questions out loud with a microphone, a headset, instead of typing, because I keep my room very small. I don't have hundreds of people in there, and you don't have to compete for my attention. So it's a coaching environment, an educational environment, rather than a me too, watch some guru guy or gal claim they did this or that trade. I'll even take losing trades because I want to teach you how to deal with losers. And I'll give you the tools to help you learn how to cope with losers so that when you graduate, you will be a professional trader. You will be on a level playing field, high on the food chain with professionals. And that means you really can cash in on this current economic explosion. So if we start adding it all up, I'm going to break it down for you real quickly. I said there were only about a half dozen other systems out there, and they typically start around $3,000 and go to well over $10,000. No, I'm not going to ask you to pay anywhere near that, so you can relax. But even if I did price the TradeSafe system at the low end of the spectrum at $3,000, and then add in my personal coaching, and I get $500 an hour for corporate clients, you get me even offline, out of the trading coaching room, offline on the phone if you need me. Nobody else does that either anymore. I want you to have full hands-on coaching. You get me during that entire duration. Plus, you get in the members area. It's password protected, and everything you're seeing here in this presentation is yours for life. You do not have to pay another penny to renew anything or anything like that. It's yours forever. So once you get in there, we've got in the members area a lot of both printed material to get you up to speed, but also a lot of training videos. And they will get you to the point where you at least know the basics, the fundamentals, so that you will know what you don't know. And then after that, you will then want to use our already created custom workspace and charting templates. They're all set up, takes 5 minutes to install. You don't have to build it from scratch. But if you're a little intimidated and you say, I don't want to do that, Guess what? I have a full-time support desk. No, I'm not a one-man band. I have a full corporate staff, and I have an actual support desk, and my guy will remote access into your computer and help you get the job done to make sure everything is set up properly. And of course, you saw my trend indicator, and you saw all of the 4 steps, each one with all of the proprietary indicators that are part of those 4 steps that get you into a trade-safe trade. And then you saw the 3 exit strategies, one of them anyway, but there are 3 of them. And those ATMs, automated trade management, is what that stands for. That's what helps you keep up with things like the NASDAQ, like Iron Man was concerned about the NASDAQ. Now, I already talked to you earlier about the importance of tailoring the trade safe system to your personality and the market you trade. That procedure is called benchmarking. Once you're done with the benchmarking process, you will typically have generated over the 30 trades or more. On average, my students generate about $3,000 to $5,000. So that gives you a very strong indication of what you can consistently keep earning with the trade safe system. Now, when you are in my coaching room, I record everything, just like I'm doing right now. I'm recording this. I record all of what we do in the coaching room, everything I do with my charts, your charts, everything that we say, and I've got years and years of archives that you can go back through and review and learn from if you want. Now, you want to run this like a business. That's what professionals do. And if you want to run any business, you need analytics, you need feedback. We start you out with a real true business plan, not just to map your goals, but to put guardrails, to make sure that you absolutely know, what am I going to do if I get 3 losers in a row? Do I keep digging a deeper hole? You got to put it in writing. How much am I willing to lose in a day or a week? Or what's my percentage drawdown? Spell it out. It's in the business plan. We're going to take you and bootstrap you right into being a professional and run this like a business, because you will have a pre-formatted spreadsheet that's macro that lets you track your stats, and also a pre-formatted journal that lets you fill in the blanks after each and every trade so that you learn why it worked or did not work. Because don't be an amateur and jump from trade to trade. You won't ever learn anything. You need to journal why your trades aren't working. That's what professionals do. And I'm training you to become a professional. And last of all, as someone asked earlier about, hey, can you help me with getting my mind right? That was Iron Man. This tool will do that. It was originally created to help soldiers who came back from the original Gulf War 30 years ago, and they had PTSD and some of the meds weren't working. And this helped neutralize that automatic reaction, like they heard a loud noise and they went into a fighting stance or something like that. Well, eventually professional athletes caught on and said, you know, I want to be able to control myself in high stressful conditions and be able to excel. And golfers, basketball players, football players, they all use this tool. You can use this tool. It wasn't built for trading, and you can use it on anything. But you will love how it will keep you from over trading or prevent you from freezing up with analysis paralysis. This is all included. And as you can see, if we add it all up, we've got nearly $11,000 worth of value here. Shucks, we're not going to ask you to pay that. That would be ridiculous. I know that's a lot of value. And normally, what we do ask people to pay is $39.95. And those who have paid it still tell me it's cheaper than what they've paid elsewhere and gotten far less elsewhere than they got from TradeSafe. But I'm not even going to ask you to pay that today. We're going to give you a very special opportunity, but it is for a limited time. It's only good until midnight Pacific time of next Wednesday. Then it will go back up to $39.95. But between now and then, it's only going to be $19.97. So you want to know if you're really qualified to get started, because you will want to talk to me, I'm sure. Now, you may want to go ahead and jump right in and get it. That's fine, and I'll show you how to do that. But typically, you've got questions. And what I do is what nobody else does. I'm not here to be a salesman. I'm here to answer your questions. I'll give you a full hour of my time. I'll explain more about that later. But here's something else. I know that some of you are still balking at that 1997. Keep in mind, my students that got benchmarked averaged $3,000 to $5,000 over just 30 trades. I have payment plans available. Lots of different approaches that will help you chunk it down so it's much more affordable. So I'm going to give you a full week to think about it, consider it. I'm not going to pressure you to push a button tonight. I don't do that. If you want to jump to the head of the line, though, and schedule that hour's consultation with me and get any questions you want answered, and remember, when you come away, you're going to feel like your time was well spent and nobody pressured you in any way. You look at that link. You want to jot it down. I wish I could say it's clickable, but it's not. Just go to daytradesafe.com/apply now. If you do that, it will, and just let us finish. We only got a couple more minutes to go. When you do that, it will take you to my scheduler and you will see the available slots that I have. Pick the one that works for you. Now, what happens when we get together? Well, you want to do it as quickly as possible and lock in your discount, because even if, by the way, it fills up fast, because they do, and you don't find a time available until after next Wednesday, I promise you, if you make a good faith effort and schedule time with me a little bit after that, I'll still honor the discount. But I am asking you that when you do schedule, you keep that appointment. Please, I'm taking an hour out of my day to answer your questions. So please do follow up. You'll get all kinds of reminders. You'll get emails and text reminders to tell you to call me. You'll have the right phone number and so on and so forth. And it'll be a really valuable conversation. You'll get any and all your questions answered. Nothing's out of bounds, because my goal is your confidence. Now, what about that payment plan I was telling you about? Actually, there's several. The one that I recommend the most is the one that PayPal offers. When you do finally go through our sales page and click through it and go to the actual order page, you will see different ways that you could choose to pay. You can click on one of the buttons that lets you use your card, which is the standard way. But then there's also a PayPal button, which lets you use the PayPal portal to use your card or pay through them. But there's also a second PayPal button that's there. And that PayPal button is a credit button. What it does is it'll take you into the portal. It'll let you complete a quick 2-minute soft credit check. And if they like you, they will give you up to 6 full months to pay them back, the full amount. They'll pay me up front, but you can pay them back. And if you pay them back within 6 months, guess what? That was free money. You don't pay any interest. You can't do that with a credit card. So I highly recommend that. Use that option. You got nothing to lose. Unfortunately, if you're a Canadian or you're not a U.S. citizen, that's a PayPal policy. You have to be a U.S. citizen. I'm sorry. Now, if for any reason it didn't work for you, we do have other payment plans available, but if I have to assume the risk on an in-house payment plan, we will be charging interest, of course. So book that call. We'll discuss all these options in detail. If you've got a job and you want to know, can I squeeze this in? Will this work for me? Here's the way I'm trading currently and it's not working. What can I do? No pressure. I will help you diagnose it. So there's that link again, daytradesafe.com. /apply now and pick the best date and time. It fills up fast, no pressure. And do remember at least to watch this replay before you call me, because I can't recreate the entire webinar, especially if you came in late. So you will want to watch the replay, and that way you will be prepared to ask all kinds of intelligent questions. Now, there is always one person in the group who knows that they want it now. They don't want to talk to me. They've maybe even watched a presentation of mine somewhere else. If you're that person, here's how you can just get it immediately. Go to daytradesafe.com/I want in. That's all one word. I want in. If you do that, it'll take you straight away to the order page, and you can choose whatever method works for you. Now, do I have any final questions that you might want to squeeze in? We got about 30 seconds left. Last chance. Try to make it quick and brief so I'll know that you're typing. Or you can hit enter after typing a few words, and then I'll wait for you to finish the rest. Okay, nobody? Then I want to say thank you very much for taking time out to join me this evening, and let me share with you how a true automated mechanical trading system is the answer to getting consistent profits out of this economic post-COVID boom. So thank you very much, and I want you to trade safely, everybody. Good night.